Welcome to Invest. We talk about investing, finance, and professional development. As the current time of 12:09 p.m. on the Eastern Time on Jan 1st, today is the first day of 2024. Happy New Year's to everybody, and also happy holidays. I'm currently residing in New York City at the moment, so I know the time zone differences might be a little bit different. For ones that are already past due on New Year's, happy belated New Year's, but also for the ones that are locally on the domestic perspective, happy New Year's to you. And with respect to Ethereum and Bitcoin, we are currently up about 1.5% to 1% respectively, trading at, for Ethereum, $2,312, up about 1.45% so far, and Bitcoin up currently about close to 1%. Today, the stock market is closed because today is New Year's, so obviously market's closed on a federal holiday. And the synopsis of today is going to be talking about where do we see ourselves going from here, knowing the fact that Q1 is a combination of a couple of things, right? Obviously, the sector rotations from fund managers, knowing the fact that the window dressings has already past due happened in Q4, aka the Santa Claus rally that you saw a lot of stocks going up, which we'll dive into the stock market to understand where do we see going from here. Secondarily, with respect to the interest rates from the Feds, it seems like we're normalizing going forward. Is this an early signs of progressive elevations from here, knowing the fact that it's more stabilized? So that is also a good sign of a technical reversal in the beginning of a bull market, right? And last but not least would be the counterbalance of the tax season that's happening sometimes in February and March, which some people will take some chips off the table to obviously pay off the federal and the state tax that they have to do respectively. So that is also a hindrance, right? And also with respect to last but not least the Q1 earnings to depict on Q4. It's typically more of a rosy, depiction compared to other quarters because of, Q4 is typically more of a holiday catalyst combined with the timing of Thanksgiving, Black Friday, and also the Christmas holiday shopping combined with the vacations, of travel, leisure, which will be a key driver on the consumer retail sector. On the market front, which can also give some rosy picture. That can also be one of the catalysts to propel. So it's a lot of ups and downs, a lot of positive negatives, which just kind of drive this mixed signal. But the technical doesn't lie. So let's just dive into the technical without wasting any more time. So again, with respect to recording time of 12:12 p.m. on the Eastern Time. So right now with the 2317 right now, up close to 2%. On a daily, we are at the 56, so just glide on a sideways fashion. You could see that we have definitely normalized down from the 2447 mark that we try to get to the 2450, which is a level of resistance, which as you get there, you obviously will translate to into sell-off because it's a resistance level. If you cannot push through resistance level, you will just have to come down to the next level of support, which is technically 2350, right? Which you could see that we are slightly below. But the question now is where do we see ourselves going from here? On a weekly, you could see that we're quite extended at 66 out of 70, which is a moderate level of extension. And also with respect to the monthly, we're also on the relatively higher side of the spectrum at 57 out of 70. So the synopsis is that monthly seems quite negative because we are on the wrong side of the spectrum. We're slightly extended, so it's not the optimal level. So I'll give this a red candle, a red sign. And then with respect to the weekly, we're also on the highly extended level. So we do foresee some correction happening on a weeks out. So that's another red. Daily it is looking, on the opposite side of the spectrum is more of the greenish yellow. If you are understanding my color coding system now. So I would say that if you mix that all together, right, the yellowish green combined with red, we are in a more of a, I would say a more of a fuchsia level of orange. So definitely not the most ideal level to be getting in, but definitely not the most ideal level to be selling either. if you want to be accumulating. So the guidance here is that we should ideally see more sell-off, which is rating a more of a 70 to 30 percent of probability that we will be seeing a lower level. On the Bitcoin side of the equation, we are quite comparable. Daily is looking quite flattened at the 54 out of 70. On the weekly, we are extremely extended at 72 out of 70. So obviously tells you that it's not a good level to be getting in. So on the monthly, it's also showing similar level of extension. So I would say across the spectrum, monthly is red, weekly is also mega red. Daily is a little bit like a greenish yellow. So if you again mix that all together, it's still more of like a reddish orange, if that makes any sense. So definitely not the best level to be getting in or selling from here. So let's take a look at, last but not least, with respect to the equity market. We have definitely reached all-time high. You could see that we have reached to 477.55, which is all-time high based on historical level. But the question is now, like, are we going to see more elevation from here? On the monthly, you could see that we are quite extended at 63 out of 70 because we are in sky right now. So can we keep going? Technically, yes, we could, because we are with no prior resistance level that can block us. So we kind of just trading on a level of numerical support, like 475, 480, 485 respectively. So we're kind of trading on the psychological resistance level rather than an actual technical level. On a weekly, you could see that we're quite extended as well as 70 out of 70. So daily, it's crazy extended at 71 out of 70. So I would say across the spectrum is crazy red. It's like super red on daily, really red on the weekly as well, and monthly is more like a orange yellow. So across the spectrum, if you kind of put this all together, it's kind of like a burgundy red, which is pretty red across the spectrum, indicating that the equity market should correct with the despite the earnings that will be coming out. It might be rosy, but the post-mortem effects can definitely drive some level of correction, and then we have to kind of see the Fed rate hikes going forward for Q1, and also with respect to the tax season, which is definitely not a good a driver for the propellant of the equity market to go upward. So what I foresee happening is that we should ideally see some correction in Q1, and then some normalization in Q2, but the bull market should technically begin based on if we were to correct, right, and come down to a more of a moderate level at 50 or 45 out of 70. That should technically say somewhere around like Q3, Q4 this year that we will see a reversal to begin the bull market from here. So appreciate you for joining me again today. I know it's been kind of been absent in a way because my work schedule is a little demanding, but appreciate you for spending the New Year's on Jan 1st with me. But hope you guys have a great holidays and a happy New Year's to you. For ones that are obviously on vacation, have a good time with your friends and family. But yeah, feel free to reach out to me on my Patreon. And if you want to book a coaching session with me, feel free to do so. Just reach out to me below, and I can try to accommodate something, to do like an hourly coaching sessions for you two guys to just answer your questions personally. I'm happy to do that. But if you want to do that, subscribe to our Patreon updates. It talks about like the stock and the crypto market updates every single day with, relatively comprehensive spreadsheet. So if you have any questions, let me know how I can be helpful to kind of walk you through it. All right. So I appreciate you. Take care. Bye.